Monday, November 18th, 2019, Maneco 64, home of alternative economics and contrarian views. So the Federal Reserve is now monetizing not only the annual deficits, they're monetizing the annual interest payments on the debt. Of course, the annual deficits at the end of the fiscal year are added on to the national debt. I've always heard that you need to be careful when central banks actually start monetizing the interest on the debt. That's when the currency is doomed. That's when you go into hyperinflation. Hyperinflation has nothing to do really with the normal CPI or inflation. It's the loss of confidence in the currency. And I would argue that's why the stock market is going up. The very wealthy, the top 9%, they own most of the wealth, right? As you can see here by this comparison from the Federal Reserve. The bottom 50 don't own that much, as you can see. The middle 50 to 90, they do own a lot. I think those are the people that are going to get hurt a lot. The middle upper class there. The top 1%, top 9%, they will get hurt, but they will have the wherewithal to hold on to their assets. They'll have the wherewithal to actually buy assets that go to pennies on the dollar in terms of value once the system implodes. Is it going to be a collapse or hyperinflation? Right now, it's looking like a hyperinflation. So where did I get these numbers? Well, I got the numbers from the federalreserve.org website. And that's the other thing. How long will the Federal Reserve keep publishing these numbers when the situation seems to be getting more and more desperate for them, right? So you can see here, August 29th, 2019, the Fed's balance sheet was at 3,807,903. And then you go forward to the latest data, which is about 11 weeks, and we're almost 4,100,000,000,000, billion. So I've done, that's easy arithmetic, right? They've increased their balance sheet by 289 billion in the last 11 weeks. You annualize that and you get 1.366 trillion annualized. That's the pace they're on. And do the Federal Reserve buy treasuries or the deficit, which is basically what it is? Do they do that directly? No, they go through the banking system. They don't buy it directly from the treasury, but they buy it from the primary dealers who buy it from the treasury, right? It's just a way of keeping, how can I say, things separate, the way of hiding the scam, right? But indirectly, they are buying all these treasuries, right? They're monetizing the deficit and they're monetizing the interest payments. And how do I get to that? Well, let's have a look. US.clock.org. Thankfully, that is not a government site. That won't be taken off, but who knows? Anyway, you can see there, U.S. federal budget deficit official, just over $1 trillion, right? A trillion 33. And then you look below here, it says interest on debt, 374 billion, right? So you add that trillion to 374, you get almost 1.4 trillion. The Federal Reserve is on pace to print 1.366 trillion. So there you go. They're financing the deficit and they're financing interest payment on the debt in the US. And that's not a good thing. So what does one do to protect him or herself in this situation? If you're in the bottom 50 or if you're in the 50 to 90 middle class, let's say, from this situation, if you don't have such a great diversification as the top 9 or the top 1%, you're not politically connected, well, I think we could see the destruction of the currency. What could that mean? Well, that could mean that the Federal Reserve notes you hold are going to be worth very little. The only way to know what to do, in my opinion, is to look at history and see what happened in Germany in the 1920s, see what happens in countries like Venezuela. Yeah, the general public gets hit very hard because the currency that they earn money through and that they survive through, that currency is destroyed. The top 9, top 1%, they have the wherewithal to protect themselves. So it's very hard. The only thing I could say is try to get a hold of as much as physical silver, right? Cheaper than gold. And for those who can afford, try to get both, especially at these bargain basement prices that we have right now. And this does not only apply to the United States. This is going on all over the Western world. It's gonna end in tears. The Federal Reserve and the central banks, they've gone mad. And that's all there is to it. How long is this going to take to play out? I don't think it's going to take that much longer. Not more than a year or 18 months, or it could be less. That's the thing. It's difficult to predict the timing, right? But we know that they're going that way by the numbers, right? No wonder there are so many distractions out there, right? Political distractions, geopolitical distractions, right? Not saying they're not happening, but you need to focus on this, the money, right? And that's why I'm here for. So let's quickly look at where the markets are this morning. It's 10 to 8 a.m. We've got spot gold down $4. So there you go. Another chance to accumulate gold at bargain basement prices. I think there will come a day that the price won't matter. Very few people will be able to get any gold. Just like in Venezuela and Zimbabwe, they can't get any gold, right? We're at 1464. Range has been 1461 to 1470. Silver is down 7 cents, 1687. Bargain basement prices again in silver. Range has been 1701 to 1684. The Dow futures is up 54. It's a melt up right now. A lot of people are talking about 30,000 Dow. Well, good, but it's not a good sign. For me, it's not a good sign. Some people have researched that most of the gains in the stock market in the last few years have been because of the cheap money of corporations borrowing money very cheaply and using that money, and they borrow that money by issuing corporate bonds, which a lot of your pension funds are buying, right? And they take that money and buy their stock. It's like a Ponzi scheme, right? So right now, yeah, the Dow is up 55 at 28,054. S&P is at 3125, up 5 points. NASDAQ 100 future is up 1/3%, 83.38. So the move continues in the stock market. The dollar is weaker this morning versus the pound. The pound is up 1/3%, 129.48. The euro is at 110.61, up slightly, and the dollar's up against the yen though at about 1/8% at 108.90. And the dollar is also up against the yuan at 701.23, 1/8% as well. Is it an alternative to move away from the dollar if the Federal Reserve is hyperinflating the system and go into other currencies like the pound, the euro, or the yen? No way, because those other central banks from those other countries are going to be doing the same. As I said, fiat currencies, they're all going to zero. So I know I cover them here, but this is just a relative game, right? They are all sinking at different rates. Oil price, of course, is higher this morning with the stock market higher. They seem to be move together these days. Crude WTI is at $58, up 1/3%. Brent is at almost 63, up slightly just because of a different settlement time, right? Bond market. Well, the bond market doesn't seem to be reacting that much. In the old days when I was in the market, if the stock market was raging ahead and making new all-time highs like this, yields would be going up very quickly. Bond prices would be going down. It would be a signal that monetary policy was too expansive. But nowadays that doesn't happen because the Federal Reserve, of course, is printing money to indirectly buy these securities to keep interest rates low, because we know the deficit and the debt is ballooning, so they can't have interest rates go up because it will bring down the whole house of cards, right? So the 10-year this morning is actually unchanged at just below 1.84%. So there you go. Federal Reserve, they're on a very, very precarious path. I think the precipice is right on the horizon, and I don't think you want to be on that train. The train looks great right now, right? Very fast. All the top people are in there partying, drinking champagne, caviar, lobster. Yeah, and it feels like you've missed the train, right? You're sitting there by the tracks and looking at that and saying, wow, I wish I was on that train, right? But let me tell you, I think that train is gonna fall down that precipice very soon. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you hit that little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. Yeah, and I wish you all a great day, and I'll talk to you later. Take care. Bye.